Welcome back, everyone. We're coming off of a short week, but there's still lots to discuss. The Dow closed 3.8% above this long uptrending support. This support goes all the way back to the crash. I've outlined a few various periods here because I want to demonstrate what the market is doing. If you look over the last 4 months compared to the previous 4 months, compared to the previous 4 months before that, which brings us all the way back to April 1st of 2020, we can see that the market is flattening out. We had from April 1st of 2020 a 25% gain, and it was very volatile during that time. The next set of 4 months, we had a 13% gain, and again, very volatile. This last set of 4 months, we've also had a 13% gain, but it's substantially less volatile. And it just appears to me that the market is flattening out and becoming a little more reasonable. Still, the market is a little bit in no man's land. It's been since early March that we even had a touch. I think we're going to keep moving towards this lower support line. Even if the market goes sideways, it will inevitably have to intersect with this support line. That being said, there is quite a bit of volume, so the price movement is meaningful. Keep an eye on the market as it continues to move in a sideways direction until we get some clearer indication of a new pattern or potentially a bounce off of this support. Now let's take a look at Nasdaq. Nasdaq has been working on this symmetrical triangle for a little while now, and it actually broke out in the last 2 trading sessions on moderate volume, not huge volume, but like more than average volume. So that's a bullish sign for Nasdaq. One word of caution: oftentimes I've noticed that symmetrical triangles can have a fake out breakout. So even though it has made a breakout to the upside, it could reverse course and move strongly negative. I don't think the Nasdaq is going to do that because it just seems so bullish, and it broke out on much stronger than average volume. Not huge volume, but definitely more than average volume. So I am pretty bullish. That being said, I will wait a few more days to get a confirmation on this breakout. Now moving over to the S&P 500. The S&P 500 is still working through this megaphone pattern. We are continuing to make new all-time highs, which is good in one way because that's a bullish signal and it's occurring on strong volume. The downside is that it's continuing to help this megaphone pattern grow. If we have a large drop towards the bottom support of this megaphone pattern, that's a bad sign for many reasons. Obviously, we don't want the market to be dropping, but it's the volatility, the higher highs and the lower lows, that is troublesome. If we have more higher highs and more lower lows, then that's a very bearish signal for the S&P 500. The warning is there. If it does break through this lower support of the megaphone pattern, the next support is this long-term uptrending support, which has not been touched since the end of October. That's an awful long time to still consider this a support. But I do consider it a support only in the sense that if we break through this megaphone support, there is another viable support line for it to hit and bounce off of. If it then bounces through this lower support here, we're in big trouble. Right now, we are still in a wait and see mode with especially the S&P 500, but let's see what happens this next coming week.